If you want to make weekly income with a pretty small portfolio, then covered calls is a great option. This is a great way to earn weekly income with a small portfolio. And the only thing that is required is to have 100 shares of a stock. So I'm going to show you in my portfolio, I'm going to show you the covered calls that I do, and then you guys could do your own research and decide if this is something you want to do. This is not financial advice. I'm just showing you what I do. So here is my portfolio. Right now I have 2 covered calls going, so I'll show you what stocks I do that with. The first one is Ford. This is the one I started with, and it's a great one to get started because it's not that expensive. So in order to get started with covered calls, you're going to need 100 shares. So this stock is $11.49. And everyone knows what Ford is. It's not like a random company that could go to zero or like go crazy. With covered calls, you want something that stays pretty consistent and doesn't move like crazy. So Ford is a great one. So right now it's at $11 and like about $11.50. So now if I wanted to buy 100 shares, I would go to buy 100. So it would be $11.50. So when I first started doing Robinhood and started investing, I would just buy stocks that had like high dividends, or I would just buy stocks that I think were going up, and I didn't really have a strategy. But now if I would start over, I would save my money till I have my first 100 share position. So if you're just starting out with like $1,000, $1,100, you could buy this and then you have 100 shares of it, and then now you could do covered calls. Another stock that I do is SoFi, and this one has higher premiums. So you're going to be getting paid the premium, and then you're hoping that the contract expires worthless. So I'm just going to show you some examples, and I'll show you exactly how to do it in a little bit. So SoFi Technology, this one is $16.19. You would need like $1,600 to do it, but the covered calls are going to have much higher premiums. So in order to do a covered call, I'll show you what it looks like. So SoFi Technologies, right now I have 200 shares. So I did this with 100 shares, but now I could do 2 contracts. And just like with YouTube channels making more videos, you could get more positions and scale up. So now I have 200. So I go to trade options. This is exactly what it's going to look like in Robinhood. Then you choose a date. I would choose something at least like 5 to 10 days out. So I'll choose the 17th. So now we're not selling. We're not going to buy a call. We're not going to buy a put. That's a very risky strategy. Buying a call would mean you think this is going to go up and you can make a lot really fast, or you could lose all your money really fast. But this strategy is much more boring, but more consistent. So we are going to sell a call. So now it's $16.19 right now. So if you think the stock is going to stay the same and not reach $16.50 by the 17th, then you could buy this one. But if you want to be a little bit less risky, you could do 17, which is a lot less likely to happen. So let's do it the conservative way. So 17. So now I would go buy. So right now I have 200 shares, but if you had 100 shares, you could buy 1. This expires on the 17th. So now if I pressed review and send, I would make $33.96 right here, just like that. This is exactly what I did yesterday. And I made $28 just like that. Now, what happens when you do that? So there's 2 things that can happen. So if you chose the $17 one, so we made the premium, you automatically get to keep that premium right there. But then if the stock was to go to 17, which is unlikely, but let's say if something happens, it reaches over 17, then now you're going to sell all of your stocks. You're going to get assigned, and you're going to sell your stocks for $17. It sounds scary, but really it's not. Because right now, if you bought this stock for $16.20 and you did a covered call, you would make the premium, and then you would sell it for more than you bought it for, so you'd make a profit. So option A is what you want to happen, and that is nothing. It just stays under the strike price, and then you keep the premium, repeat it again next week, save the money that you're making, and get your next 100 share position. If it goes over 17, you're going to be selling your stock for a profit, especially if you're just starting this now and bought the stock today. You're going to sell it for a profit, and then on Monday, buy it again. And you could do this on and on forever. So with a portfolio of about $10,000 that I have, I make around $150 to $250 every single month, with about 5 or 10 minutes of work doing these covered calls. And if you want to see more about my covered call strategy, check out this video over here.